Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, March the 14th, 2025. Let's get started. We'll sort off by week here, but another down week for sure for risk assets in general. Silver, gold up at the top of the list here, certainly strong across the board. Down the bottom here, Bitcoin, but still bouncing in a range, and certainly stocks down. We've still got intermediate and short-term trends without question down. Let's take a closer look at this here. In the S&P 500 in the top panel here, you can just see this has just absolutely been like one day after another. There's been no real legitimate attempt to bounce here other than that Friday week and a half ago. The reality is that when you look at volatility in the bottom here versus volatility, it's interesting because despite the fact that the market seems to be just falling every single day, volatility is not rising. And so it is interesting because volatility would normally spiking from that perspective. And I do find this very interesting. I think we have to continue to have perspective on this. So here's a bunch of global stocks. So this is not a global phenomenon here. This is, again, US stocks have come under pressure. Certainly lots of things going on. We know there's lots of headlines, political headlines. But again, when you look around the world, there's lots of stocks here that are actually behaving pretty well. Of course, the US dollar index falling itself is actually a beneficiary, creates beneficiaries rather of some of these other areas. But the bottom line is, again, European stocks, Chinese stocks, some of the Asian stocks, all looking kind of interesting here. And particularly, here's European financials. I think I touched on these a couple of weeks ago. So on your left side, we've got European financials in a clear uptrend, right? That was a pretty big breakout starting the year here. If you look in the right side panel, what we've got is a relative uptrend versus US financials, and we've got it versus the S&P 500. So in the course of the last week here, you can see this is actually a short-term pullback against. So again, this is a pretty strong area, certainly has my attention. Now, copper has been very strong. And again, I just want to kind of point this out because first off, copper has, is typically looked at as, it's got a PhD in economics. It's a forecaster of economic growth. And so it's interesting to see copper surging up here to basically a one-year high. Now, again, we're getting pretty close here to moving through $5 and moving onwards. But if you look at copper stocks in the bottom, not so much, right? Very, very different chart here. I've plotted the same trend lines over these. So again, remember, equities, stocks themselves, they don't necessarily have to move like the underlying. And that certainly relates to gold stocks, which we're going to get to here. Here's gold versus the S&P 500. So this is actually going up to a 4+ year high. What that means is that now in the 4+ years here, gold has done better than stocks. And that is just something we need to continue to understand and embrace because again, correlations and uptrends, this is how we diversify portfolios. If you look at this perspective here, on the left side, we've got gold bullion versus Toronto dividend stocks. And on the right side, we've got gold bullion versus US dividend stocks. Of course, a lot of people want to hold dividends, that's fine. But remember, dividends plus capital gain, or in this case, loss for the most part, is important to understand. So gold continues to outperform pretty much all things, aside from, of course, Bitcoin, which we'll get to again in a minute. But bottom line is we need to constantly keep these things in mind because, again, they help us to understand bigger picture what's going on, right? I've shown this chart before. In the late 90s, you could sell the S&P 500 for 5.5 ounces of gold. Today, you're only getting 1.9 ounces of gold, right? So again, the value in gold terms is been falling. And so I think that's really, really important. It's very, I guess, different perspective. And I think it probably makes some of your head spin when you try to put your head around this. But the bottom line is that what were we trying to do as investors? We're trying to protect our overall purchasing power. And that is essentially the goal, to outpace things like rising prices behind us. Now, here's the gold stocks in Toronto. They're stronger than the US. That's why I'm showing them. You can see these are breaking out actually to a multi-year high. This is actually a 5-year high happening right now, which is interesting. But in the bottom panel here, you can see these same gold stocks underperforming gold bullion. So that's exactly what I've been talking about over and over again over the course of the last year and a half. You've had strong gold prices, and yet at the same time, the gold stocks really have been lacking. Now, is this the start of some big mammoth rally? Well, we'll have to remain to be seen, and we'll continue to watch that. But the bottom line is what's always to be aware, there's more volatility in the underlying stocks. And again, sometimes the underlying itself is the place to be. Now, let's do the door 1, 2, 3 thing again here. So on the left side, these are all weekly charts. Bitcoin is in a higher highs, higher lows uptrend. We are oversold on a weekly basis. Here's the S&P 500. Here's the heaviness here, certainly in the last 4 weeks here after we've reversed off this high. Again, obviously oversold in the same perspective. I already showed that last week, and clearly this week we got more oversold. And then on the right side, we've got gold, which is definitely overbought. Now, again, I want to just do a very quick lesson here. Oversold does not mean buy, and overbought does not mean sell. Okay, it does not mean that at all. In fact, The trend is very, very important when we're going to go and interpret oscillators, right? So when I look at really, the bigger picture here, although this stocks certainly looks heavy and weak, the fact that Bitcoin has rallied off of those lows starts to give it a sort of that selling tail feature, but it's higher highs and higher lows that actually needs to capture our attention. So bigger picture, that's exactly what we still have in the US here. Although again, when we certainly zoom in, there's some damage on the US charts. There's no doubt about it. So again, just because gold is overbought, that is a sign of strength, okay? That is not a sign that sort of suddenly it has to go and peak out. I actually disagree with that. So this is the BitQ here. So again, our clients are familiar with this, and for the last couple of years, we've been sitting, basically involved. And this is an example of how corrections, they can be big and they can be painful, but in the context of higher highs and higher lows, you do need to be able to sit through corrections to be able to sort of participate on the bigger picture. Now, if you take a look closely at this, there's a lot of corrections here. There have been 5 corrections I've got marked. This last one here is a 44.2% drawdown off of the highs from the fall. That's a lot of volatility. At the same time, you can see where we are. We're at higher lows than we were. And so again, in the context of an uptrend, these pullbacks, what turn out to have been pullbacks, again, are something that an investor sitting through them is able to participate in the bigger picture. But again, it's hard to do. Let's look at some of the all-in-sync positions here that continue to hold up, although again, some of these strong positions continue to give up in this market, which is no real surprise, I suppose, given the magnitude of the decline. Agnico Eagles in the top left, that is a gold producer, outperforming gold stocks by far. Dollarama on the Canadian staples side. Fairfax Financial is again on the insurance but financial side in Canada. And then Broadcom continues to be actually the only semiconductor stock above the 200-day moving average, still clearly in a weekly uptrend, although sure, again, it'd be nice to sort of see this come back upwards and turn upwards. Again, this is a great example. We've talked about Costco before. Costco has been a massive outperformer, not only against the market, but certainly versus its consumer staples sector. You can see on the left trend, right? If we just look at the monthly chart, like there's no question, right? Back of the room test. This is 15 years. But that negative action there that we can see on the very right side of the chart, it's exaggerated when we go turn on the weekly chart on the right side here. So the fact is, I showed recently these green circles being pullbacks in an uptrend. The problem is that this week Costco has gone below that last pullback spot, which means that's a lower low. Now, could this all be resolved today? Market's going to open higher? Of course it could, but the reality is lower lows changes that definition of an uptrend, at least puts question marks at the very least. Yes, a downtrend needs lower lows, but it also needs lower highs. We certainly do not have that here. But again, an investor has to manage risk, and that's been the trouble with this market, is that the strongest stocks, they're strong until basically they're not. And that seems to be the case with Costco, which has come under a lot of pressure this week. Let's sort by week here. There's the gold stocks we just talked about, up 5.5%. On the bottom, we've got the discretionary stocks, communication stocks, and technology for the most part. So again, we certainly have lots of long-term trends that are still up. And this is why it's so important to, again, remember to zoom out, right? We're being faced with and inundated with massive amounts of news and headlines and trade wars. But the reality is markets are very oversold there. They do deserve to bounce. The fact that they're not bouncing so far is definitely problematic. It's not an ideal situation. At the same time, an investor needs to manage risk. And that is what exactly we will be up to. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.